Hello there and welcome to The Big Picture. I'm Tracy Shilshi and today we're hoping to find a solution to what has hit India's 95 trillion banking sector. 29 state-owned banks have written off as much as 1.14 lakh crore rupees of bad debts between financial years of 2013 and 2015, much more than they had done in the preceding 9 years. The RBI says that while bad debt stood at 15,551 crores for the financial year ending March 2012, they had shot up by over 3 times, and that is by the end of March 2015. All this prompted the Supreme Court to remark that, quote-unquote, rich people take crores of rupees as loans and declare insolvency while poor farmers are suffering, unquote. The RBI had submitted the list in a sealed cover with a request that the information to be kept confidential or else it would have a serious impact on the economy. But what is the bigger solution? We are speaking today to our panel to find out. We have, of course, in studio, senior economist Mohan Guruswamy joining us. We also have the former Secretary of the Ministry of Commerce and Industry, Mr. Ajay with us. Also from the capital, we're joined by former RBI and IMF member Renu Kohli, and former Chief GM of the Punjab National Bank, US Bhargava. If I could come to you, sir, Mr. Bhargava first. Mr. Guruswamy, if I could come with you first. If you could just explain to us, the numbers, these mind-boggling numbers, and how could it have led up to such, mind-boggling numbers? How could it have led up to this?
It only means that, many people who borrow from banks don't return money back and are not able to service the loans. It doesn't mean the only industrialists. Even small borrowers in rural areas also don't return their loans or service their loans. So it's a big, major problem. The banking sector has lost the ability to collect. And the lending has been very indiscreet. All in sudden, they're meeting targets. So all these small loans, which gave under very many popular schemes, practically written off. And the big loans have been given under political pressure, patronage and all that. And many of that is written off. There's quite a few cases of outright fraud. Companies which don't exist got money. Companies which disappeared got money. So all this is now beginning to accumulate. The banking system was big enough to absorb all these things for a long time. But now there's a terminal size beyond which now, last year the banking sector wrote off 1,14,000 crores.
Yes.
The bad debt, NPAs, that is, people are not able to service their interest, is now going to be 4.5 lakh crores. By next year, it will go up another 30 crores. And this is what is stated. There's a lot of understated depths. This is probably the tip of the iceberg. We don't know how big the iceberg is below.
Yes.
As to see what this picture is. So I think the RBI has got its hands full, it's got its task cut out, or it's taken and, And I think the problem, we discussed this with Mr. Dua just before we came in, problem is that all the banks have become departments of a major department. Banking ministry, the banking department, finance ministry controls 14 big banks. They're not even able to appoint their chairmen and executives internally. There's a banking commission which does that, all kinds of things. And decisions are made in Delhi.
Yes.
All loans, big loans are sanctioned in Delhi. And that is the problem. That is the disease.
And that is the reason why NPAs are growing. I mean, you have these assets which perhaps today may look still feasible to be sold, still feasible to, put up for auction, but you wait for years and by then an airline, an aircraft eventually becomes just scrap material.
Every time a company which has borrowed money is not able to service it, comes to the banks for a restructuring, what really happens is there's no restructuring done. There's more money given. Restructuring means you sell some divisions, sell some business, sell some land, sell some plants, get money back and become more efficient. Here there's more money thrown in.
Yes.
So, everything is, gone upside down here.
Okay. Mr. Dua, like we are talking about, where is the solution? I mean, that is what we started off as saying. We do understand it's difficult to, but in the past few months, there have, of course, been a rising demand or an opinion definitely among economists. Perhaps it's time to privatize all banks. Is that where it does lie, the solution?
I think before we discuss the solution, if you just look at the genesis of the problem. I think the problem started when we nationalized the private banks way back in 1969. Till then, the banks were then private banks, which later on became public sector banks, they were more used to sanctioning working capital, not term capital or investment banking. For investment banking, if you would recall, the government had created 3 other banks, IDBI, IFCI and ICICI. I mean, it was not entirely government creation, but there were 3. Their role ended almost completely by 2005. And that is when the mantle of even giving term loan fell on the nationalized public sector banks squarely. And I think they couldn't rise to the occasion. They just didn't have the ability. One, they were raising money, short-term money, lending long, so there was a mismatch. Second, they didn't have the credit assessment ability. What is the credit risk? They couldn't do it. And I think that has continued even today. The problems, there are certain problems which we must recognize and give them the benefit of doubt, that since 2008 we are seeing a global slowdown. There has been a significant slowdown in the Indian economy in 5 or 6 sectors, infrastructure, steel, cement, construction, mining, etc. And all those who lent at one point of time in 2008-9, we were still, it took us 2 or 3 years before we got impacted. You know, we started getting impacted 2011-12. So there was probably a business risk, there was a business misjudgment. Nobody ever thought that the banking sector would be in such a mess as it is. But at the same time, I think the various issues which Mr. Guruswamy raised, the question of we are running banks as if they are government departments. That's certainly not possible to do that. It was all right when the banks were small. Now these banks have to be run as professional banks, and the proof of the pudding lies in, let's look at the NPAs of the private sector banks and those of the public sector banks. The public sector banks are probably 2.5 times or 3 times more than the private sector banks. It's not that the private sector, they also face the business risk. But at the end of 2015, their total assets, the gross NPAs were 1.2% and net NPAs 0.8% of their total assets. Compare these with the figures of the public sector. Instead of 1.2, it was 3.2 there. Instead of 0.8, it was 1.8. So there is certainly an issue of governance and certainly an issue of capabilities which the public sector banks are being asked to discharge when they didn't possess it. That is of looking at term lending and investment banking.
Okay, let me bring in Mr. Bhargava at this point of time. Mr. Bhargava, do you agree with the points being made? You know, it's a governance issue eventually at the crux of it. And what do you feel is, you know, perhaps going to be the best solution at this point?
Tracy, I will agree that some of the points have been brought out rightly by Mr. Guruswamy and Mr. Dua. But then there are multiple reasons for the situation which we have landed into. Outside influence, whether it is political influence or whether it is government influence or any other influence, all influences need to be checked, and the cases should be considered by the banks strictly on the merits only. But then again, there are various reasons of the failure of different industries and companies. Some of them face genuine difficulties. For example, in case of steel industry today, or in case of the power sector, the power producing and distributing companies, they had to face many problems because of the writing off of the charges, and they are not getting the money, and in turn the bank loan becoming sticky. And then again, in case we say that infrastructure including the highways etc. were financed by the bank, where the clearances were not received from in time, and then the cost overruns were there. So in nutshell, there have been some genuine reasons also for failure of the loan accounts. But then there are some such cases also where the advances have been made because of the exterior influence, which naturally needs to be curbed immediately. But the real concern for the industry and economy and the nation should be that we have to segregate the 2 types of cases where the genuine reasons have been there for failure of the company, and where the defaults are willful. And the country should be really concerned about the willful default. Now, I feel strongly.
But that's the problem, isn't it? It does seem the willful default. I mean, how do we segregate these two? You know, at this point of time, with the amount of numbers that we're talking about, it does seem the willful default is not just from, of course, the loan, you know, the ones who are taking the loan, but also from the bank side. There seems to be a lack of, you know, pressure. In that case, does a bankruptcy law help? In that case, like we're talking about as well, also privatization, would that help? You know, where the governance, the politics of it doesn't really seep into in such a manner.
But if there was prudential lending, then the banks wouldn't have lent the power companies money. And I would have said, you first get the clearances and then come. If the power companies didn't get the clearances, they would have put pressure on the government to get the clearance. Here, you know, this became a seen-through process. I got a permission, I got a license, give me the money.
Yes.
So, you know, so the incentive to insist on, you know, that you get all your land clearances and come for a road project. So it became an adjunct of government, banks became. So, you know, you sat with the minister and then, you know, the industry guy was there, you were there, and you said, okay, I'll give you the money. And you started, and money got stuck. So, you know, private sector companies, how come they don't get, banks don't get into this gem? You know, Mr. Dua gave the figures. And not only that, the profitability of private sector banks is 5-6 times more than the profitability of the big public sector banks. And the spread of the banking system, the price we as citizens pay, is that you deposit money in the bank, you get 7% or 8%, you know, whatever. And when you want to borrow money, it gets 16 to 17%. So that spread is huge. Nowhere in the world do you have an 8-9% spread. Normally, banks all over the world operate 1.5 to 2% maximum. You've got this huge spread. So who's paying the cost? We're all paying the cost for it. Not only is it losing money, it has become a very expensive banking system. Affects competitiveness of our industries world over and in the domestic market.
Ms. Kohli, if I could come to you, you know, what is the international experience that we see on issues like this? Do we see, definitely there are countries that are suffering, you know, that have suffered in the past as well in this manner. But as far as India is concerned and these numbers are concerned, what do you feel seems to be the solution eventually?
See, internationally, India stands out, for example, in one dimension, which is that the size of the public sector in the banking system is quite large. You know, more than 3/4 of the assets belong to the public sector. And in that sense, India is unique. And while there have been a lot of reforms in the banking sector itself since 91-92, what has not happened really is the share of the government, or the government's extent of shareholding has come down only minimally, and the control remains in the hands of the government. Now, I have heard the preceding discourse and the comments of the other panelists, and I'm also aware of the way the public discourse has moved in the past 1 or 2 months. And it seems to me that the large part of the criticism is falling upon the public governance. Now, there is surely a governance issue, and internationally, a lot of privatization has taken place in the banking sector, typically as countries have reformed and private shareholding has increased. But at the same time, the international experience, to the best of my knowledge, is that that isn't really a panacea. Now, what do we do in India? Now, clearly there is a governance issue, and there have been committees. Committee after committee has actually recommended, going right back to the Narsimham committee, is to bring down the government shareholding and professionalize the management and the decision taking. To me, it appears that the political appetite or will for that is just not existence, whatever hue the government of the day might be. Since there is now such a crisis, and clearly it is not that the action is not taking place or moves are not being taken, made by either the regulator or the government to address the NPA issue, we must understand that at a time when the economic cycle is down and the banks are structurally weakened, there is also a need to take a nuanced view and find solutions to move ahead. I think public, the more public scrutiny and the more things are discussed in public, it isn't really conducive for resolutions. So any move towards privatization at such a time, at least, you know, some bit of exemplary moves would be one way of moving forward. The other is that the Reserve Bank has already started, you know, taking a stricter asset quality review and started addressing the NPA issue. The point is that there, to me, it appears that there is some kind of a mismatch there. Are you there? Am I being heard?
Yes, yes, we are hearing you. Yes.
Audio chala gaya. Oh, okay.
We can hear you.
Sorry,
yes.
because there was a problem in the reception earlier. Okay. Yeah.
Yeah, so yes.
You know, the mismatch is simply that the banks have been weakened because the quantum of NPAs has jumped up in the last quarter, and again in this quarter ended March, it's going to jump up again because of the fast pace of NPA recognition. That has to be matched by the adequate amount of recapitalization. Now the government doesn't have that much money. So where do we? It is a financing issue also, as to how to capitalize them and make them stronger. There is, of course, the appointment of the Bank Board Bureau, and there is going to be consolidation. But, you know, there has been some bit of consolidation in the past 20 years also, and it isn't entirely clear that consolidation is certainly going to improve the banks. Whichever one is consolidated, you know, the balance sheet will improve.
And that's
doesn't naturally,
you know, that's what in fact I was trying to highlight, that there have been plans, there have been steps that have been taken. You know, like as being pointed out by Mrs. Kohli, that you know, in order to make things more transparent, in order to make things more easier for the banks, definitely. But Mr. Dua, you know, is it a time finally to make that big change? And like I'm coming back to it again, you know, privatization is, you know, is that looking feasible at this point of time, or is it still a difficulty in a, you know, in an economy like India?
Let me say, now we have very few choices. We have reached such a situation that unless we take certain measures about which we have so far only been talking, we are going to see the economy. You know, after all, the banks are the engine of the growth. And if the banks are not able to lend to the extent they are expected to get these higher rates of growth of employment, the economy, GDP, etc., we are going to be in a crisis. The question is privatization of our, say, the banks, is it an answer? I would say only partly. One, right now our banks, considering we've seen the extent of NPAs, etc., which we've seen, there was an exercise in somewhere I was reading that the value of our 15 top banks is today less than 50% of what it was 18 months ago. So we should not be you know, kind of government disinvesting completely, even if they are strategic investors, because this is not the right time to fully invest. What is required is, I think, alongside that, and at an appropriate time, we should be disinvesting and letting the banks function as private entities would be, in which the government is one of the shareholders. There are others as well. But right now, I think what's required is build up pressure on the borrowers, build up pressure on the lenders, which to my mind is essential, and we should not be going along with the Reserve Bank's plea to the Supreme Court saying that this information about borrowers, lenders, etc. will be kept as confidential, because then it's not going to create the kind of pressure which is needed to have greater transparency in the scheme of things. Second, I would expect the Reserve Bank, which has been insisting, and because of it, the greater provisioning had become necessary, because it said it tightened the norms for declaration of NPAs, etc., and then consequently provisioning, etc. The Reserve Bank should now wield the stick. As a regulator, it is necessary that it enforces the regulations which do exist, and that's upon the banks, that if the banks do not comply, that there are penalties to be visited upon the banks also, which would mean the banks will act tougher with the regulators, with the borrowers. The banks will also monitor much more the loans than which they have been doing. Similarly, the Reserve Bank will monitor the banks much more than which it has done in the past. The question has been raised about capitalizing the bank. Certainly, just to fall in line with the Basel III norms, we need to get about 1.6 lakh crores or is it 1.8 lakh crores in the next 3 years. The government has only provided for 75,000 crores over 3 years, whereas what's required is 2.5 times or 2.25 times much more. So we will need to certainly find ways and means how to capitalize it. We would need to disinvest once the market picks up, but the disinvestment has to be oriented towards getting out of the government's control of the banks.
But how does that work? How does
would,
that happen?
If the government is no longer the major shareholder of the government, does not have today, even in State Bank of India, the government has 61% shareholding. We have to be moving to a stage where the chief executives of the banks are appointed by the board of directors, not by the government.
Mr. Guruswamy,
those kind of things.
I entirely agree. We had a collusion on this. We discussed this
Tracy,
before.
I like to make 1 or 2 points.
But
yes, we are just coming to you, Mr. Bhargava, very quickly.
I have a slight disagreement with Mr. Dua on this. The capital inadequacy is very real now. The government doesn't have the money. I think there's no question of disinvestment. You should expand the shareholding and go to the public, go to the markets and raise more money. Straight away. I think some of the banks need this. You take one bank after the other. Second step I would take is I would dismantle, shut down the Department of Banking. You know, when Manmohan Singh became finance minister, the first thing they did for reforms is shut down DGTT. Department of Banking is now the new DGTT. It regulates licensing, regulates who comes into business. That has to go. Completely shut it down. You know, so bureaucracy loses control. And because the bureaucrats are in control, the politicians are in control.
Absolutely.
They lose control of the banks. And the banks then, I said, there's no transfer of across the board, you know, executive director here becomes chairman there. All that is out. Everything is internal here.
I've just been told we're running short of time. Mr. Bhargava, if I come to you and you could make your point, yes.
Tracy, I would like to say that as far as privatization or reduction in the government equities, etc. is concerned, that may take a little time. But immediately, there should be some multiple steps which should be taken for protecting the banking industry. One of them, most important, is that all outside influences should not be there, which the government has been saying, but then it should be actually practiced now. Then there is a need for sharpening the skills of the bankers for financing the long-term requirements till the bond market matures. Number 3 is our judiciary needs to expedite the cases which are pending for very long in different courts, and that encourages the willful defaulters. They carry a feeling that in case we raise a loan, we default, at least for the next 10-15 years, no harm will happen to us. And then for further strengthening the laws also, the bankruptcy law, as soon as it is possible, should be brought into, so that the cases are decided well in time, and the assets which are not put to proper use today, because of the company not working properly, they at least should be put to proper use, which will be very much in the interest of the economy at large. And for that purpose, in case, in some genuine cases, one-time settlement also is reached, so that at least after the one-time settlement, the proper management takes care of the assets which have been created, whether they are in the shape of machinery or in the shape of the other infrastructure, many of which are today lying idle because of the companies not running properly. If after OTS we are able to put all these assets to proper use, then probably we will be doing justice to the economy at large.
You know, what's ironic is that we do get all these suggestions, we're getting all these interesting opinions and, of course, advice as well from all sorts of economists like you, of course, joining me on the panel today. But, you know, eventually it depends, of course, like you're pointing out, on the governance, the pressure, of course, of it, and, of course, the RBI. And, you know, like Raghuram Rajam says, you know, we need deep surgery, not just a Band-Aid. And we do hope, you know, some long-lasting solutions eventually come up. I'm sorry, that's about the time I have here on The Big Picture. Thanks so much for joining us. We'll be back tomorrow with another topic. Thank you.